For financing the infrastructure needs, the stepping up of public investment will need to be complemented by private capital at a significant scale. Measures will be taken to enhance financial viability of projects, including PPP, with technical and knowledge assistance from multilateral agencies. Enhancing financial viability shall also be obtained by adopting global best practices, innovative ways of financing, and balanced risk allocation. Digital rupee. Introduction of a central bank digital currency will give a big boost to digital economy. Digital currency will also lead to a more efficient and cheaper currency management system. It is therefore proposed to introduce digital rupee using blockchain and other technologies to be issued by the Reserve Bank of India starting 2022 and 23. Financial assistance to states for capital investment. Reflecting the true spirit of cooperative federalism, the central government is committed to bolstering the hands of the states in enhancing their capital investment towards creating productive assets and generating remunerative employment. The scheme for financial assistance to states for capital investment has been extremely well received by the states. In deference to the requests received during my meeting with the chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the budget estimates to 15,000 crores in the revised estimates for the current year. For 22-23, I'll repeat that sentence for the benefit of many of our honorable members. In deference to the requests received during my meeting with chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the BE to 15,000 crores, 15,000 crores in the RE of the current year. For 22-23, the allocation is 1 lakh crores to assist the states in catalyzing the overall investments in the economy. These 50-year interest-free loans are over and above the normal borrowings allowed to the states, This allocation will be used for PM Gati Shakti related and other productive capital investments of the states. It will also include components for supplemental funding for priority segments of PM Gram Sadak Yojana, including support for the state's share, digitization of the economy, including digital payments and completion of OFC network, and reforms related to building bylaws, town planning schemes, transit-oriented development, and transferable development rights. In 22-23, in accordance with the recommendations of the 15th Finance Commission, the states will be allowed a fiscal deficit of 4% of the GSDP, of which 0.5% will be tied to power sector reforms, for which the conditions have already been communicated in 21-22. Fiscal management. As against a total expenditure of 34.83 lakh crores of rupees projected in the BE 21-22, the revised estimate is 37.70 lakh crores. The revised estimate of capital expenditure is 6.3 lakh crores of rupees. This includes an amount of 51,971 crores towards settlement of outstanding guaranteed liabilities of Air India and its other sundry commitments. Coming to the budget estimates, Honorable Speaker, sir, the total expenditure in 22-23 is estimated at 39.45 lakh crores, while the total receipts other than borrowings are estimated at 22.84 lakh crores of rupees. The revised fiscal deficit, Honorable Speaker, in the current year is estimated at 6.9% of the GDP, as against 6.8% projected in the budget estimates. The fiscal deficit is in 22-23 is estimated at 6.4% of the GDP, which is consistent with the broad path of the fiscal consolidation announced by me last year to reach a fiscal deficit level below 4.5% by 25-26. While setting the fiscal deficit level in 22-23, I am conscious of the need to nurture growth through public investment to become stronger and sustainable. I will now move to Part B of my speech. Direct tax. Honorable Speaker, sir, I take this opportunity to thank all the taxpayers of our country who have contributed immensely and strengthened the hands of the government in helping their fellow citizens in this hour of need. So I have brought in a little verse from the Mahabharata. I won't spend more time reading because I would like the speech to get enough time. However, the substance of it is the king must make arrangements for yoga kshema, which is the welfare of the populace, by way of abandoning any laxity and by governing the state in line with dharma, along with collecting taxes which are in consonance with dharma. This is Mahabharata Shanti Parva Adhyaya, Shloka 11 from 72. Drawing wisdom from our ancient texts, we continue on the path to progress. The proposals in this budget, while continuing with our declared policy of stable and predictable tax regime, intend to bring more reforms that will take ahead our vision to establish a trustworthy tax regime. This will further simplify the tax system, promote voluntary compliance by taxpayers, and reduce litigation. Introducing new updated return. India is growing at an accelerated pace and people are undertaking multiple financial transactions. The Income Tax Department has established a robust framework of reporting of taxpayers' transactions. In this context, some taxpayers may realize that they have committed omissions or mistakes in correctly estimating their income for tax payment. To provide an opportunity to correct such errors, I am proposing a new provision permitting taxpayers to file an updated return on payment of additional tax. This updated return can be filed within 2 years from the end of the relevant assessment year. Honorable Speaker, sir, presently, if the department finds out that some income has been missed out by an assessee, it goes through a lengthy process of adjudication. Instead, with this proposal now, there will be a trust repost in the taxpayers that will enable the assessee herself to declare the income that she may have missed out earlier while filing her return. Full details of the proposal are given in the finance bill. It is an affirmative step in the direction of voluntary compliance. Reduced alternative minimum tax rate and surcharge for cooperatives. Currently, cooperative societies are required to pay alternate minimum tax at the rate of 18 and 1.5%. However, companies pay the same rate, the same, which is the alternate minimum tax, at the rate of 15%. To provide a level playing field between cooperative societies and companies, I propose to reduce this rate for the cooperative societies also to 15%. Honorable Speaker, sir, I also propose to reduce the surcharge on cooperative societies from the present 12% to 7% for those having total income of more than 1 crore and up to 10 crores. This would help in enhancing income of cooperative societies and its members who are mostly from the rural and from farming communities. Tax relief to persons with disability. The parent or guardian of a differently abled person can take an insurance scheme for such person. The present law provides for deduction to the parent or guardian only if the lump sum payment or annuity is available to the differently abled person on the death of the subscriber, that is the parent or the guardian. There could be situations where the differently abled dependent may need payment of annuity or lump sum amount even during the lifetime of their parent or guardian. I propose thus to allow the payment of annuity and lump sum amount to the differently abled dependent during the lifetime of the parent and guardians, that is parent or guardians, attaining the age of 60 years. Parity between employees of the state and central governments. At present, the central government contributes 14% of the salary of its employee to the National Pension System, NPS, Tier 1. This is allowed as a deduction in computing the income of the employee. However, such deduction is allowed only to the extent of 10% of the salary in case of employees of the state governments. To provide equal treatment to both central and state government employees, I propose to increase the tax deduction limit from 10% to 14% on employers' contribution to the MPS account of state government employees as well. This would help in enhancing the social security benefits of the state government employees and bring them at par with central government employees. Incentives for startups. Startups have emerged as drivers of growth for our economy. Over the past few years, the country has seen a manifold increase in successful startups. Eligible startups established before 31/3/2022 had been provided a tax incentive for 3 consecutive years out of the 10 years from incorporation. In view of the COVID pandemic, I propose to extend the period of incorporation of the eligible startup by 1 more year, that is up to 31/3/2023, for providing such tax incentives. Incentives for newly incorporated manufacturing entities under concessional tax regime. In an effort to establish a global competitive business environment for certain domestic companies, a concessional tax regime of 15% was introduced by our government for newly incorporated domestic manufacturing companies. I propose to extend the last date for commencement of manufacturing or production under Section 115B(ab) by 1 more year, that is from 31st March 2023 to 31st March 2024. Scheme for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%, 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient. Litigation management to avoid repetitive appeals by the department. It has been observed that a lot of time and resources are consumed in filing of appeals which involve identical issues. Taking forward our policy of sound litigation management, I propose to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in the appeal before a jurisdictional high court or Supreme Court, in any case, the filing of further appeal in the case of this assessee by the department shall be deferred till such a question of law is decided by the jurisdictional high court or the Supreme Court. This will greatly help in reducing the repeated litigation between taxpayer and the department. Taking forward our efforts to further promote the IFSC, I hereby propose to provide that income of a non-resident from offshore derivative instruments or over-the-counter derivatives issued by an offshore banking unit, income from royalty and interest on account of lease of ship, and income received from portfolio management services in IFSC shall be exempt from tax subject to specified conditions. Rationalization of surcharge. In the globalized business world, there are several work contracts whose terms and conditions mandatorily require formation of a consortium. The members in the consortium are generally companies. In such cases, the income of these AOPs has to suffer a graded surcharge up to 37%, which is a lot more than surcharge on the individual companies. Accordingly, I propose to cap the surcharge of these AOPs at 15%, 15%. Further, the long-term capital gains on listed equity shares, units, etc., are liable to maximum surcharge of 15%, while other long-term capital gains are subjected to a graded surcharge which goes up to 37%. I propose to cap the surcharge on long-term capital gains arising on transfer of any type of assets at 15%. This step will give a boost to startup community, and along with my proposal on the extended tax benefits to manufacturing companies and startups, reaffirms our commitment to Atmanirbhar Bharat.